Hello, I'm Sth Cant for interest.co.nz. Welcome to this daily briefing in which we're going to look at the aftermath of the OCR cut of 100 basis points yesterday. Now, it's probably, you don't need us to tell you it's been a tumultuous month, but it's been a tumultuous month on global credit markets, and that's been finished by this record cut of 1% in the OCR by Dr. Bollard. The RBNZ cut has now given room for the banks to hopefully pass it on, and we've already seen Kiwi Bank and Westpac cut their variable mortgage rates by 1%, the whole cut they've passed on. Now, there have been smaller cuts in fixed rates from the banks that have moved so far. That's because the risk premium for them is rising. ANZ has generally cut between 0.35 and 0.8%, Kiwi Bank between 0.2 and 0.7. We've seen ASB cut by about 0.25 to 0.85. The big thing here are the 6-month fixed rates that seem to have dropped lower than the other ones. ASB's 6-month fixed rate has dropped by 1.25%. Now, we're seeing the 2-year fixed rates drop from the banks that have moved, generally about 0.5 and 0.6%. What this has done is created a smaller gap between the two, between fixed and variable, and for the first time since 2004, we're now seeing a positive rates curve. That's where fixed rates at the top, at the longer term fixed rates, are higher than shorter term ones, and that's the first time in a long time we've seen that. Now, we expect here that the big banks will settle about 8%, just above 8%, sorry, and the discount banks to settle their 2-year rates just under 8%. And that's like TSB and Kiwi Bank. Obviously, TSB is now at 7.78% for their 2-year fixed rate. Now, how long will this last? How long can rates continue to be, will they continue to be cut? There's expectations of room for another 50 basis point cut in the OCR in the next few months. And for investors, it's looking pretty grim, well, more grim than it was a couple of days ago. We think you can expect 1% cuts in term deposit and savings rates pretty soon, and we've seen some already. Kiwi Bank, TSB and Westpac have all made cuts in their savings rate interest rates. So for nimble investors, it's the opportunity now to lock in the old rates as soon as possible. And there are still some opportunities there. We see with this new deposit guarantee scheme introduced by the government, basically all finance companies are now AAA rated. But because of that, you can expect cuts from them as well, and we expect that they'll get closer down towards the banks as in the next few weeks. But one big opportunity we can see is South Canterbury is still offering 10% for an 18-month fixed rate, and that is effectively, well, will be effectively guaranteed by this new government guarantee scheme. The irony here is that those who have locked money into cash pies for tax savings, had they waited, 10% offered by South Canterbury at a 39-cent tax rate is much better than a 6.5% that you could see in your cash pie at a 30-cent tax rate. So it's a bit ironic now. But these opportunities, of course, are only available during the transition at the moment, and we'll see in the next week, transition between of banks passing on this OCR cut. So it's an interesting time to review a few strategies. If you're a nimble investor, try and lock in old rates as soon as possible. I'm Sth Cant. That was a daily briefing looking at the aftermath of the OCR cut yesterday for interest.co.nz.